Hey, if you're looking to create a set of financial projections for a marketplace type business, so these would be businesses similar to Airbnb or Uber or Etsy or eBay, these are platform businesses with buyers and sellers, then you've come to the right place because we have built a marketplace financial projection template that I'm going to walk you through here, show you how to fill it out, how you can make it work to help you raise capital from investors and lenders, and walk you through this step by step. Before I dive into the template, just a little bit of background. My name's Adam Hoeksema. I'm the co-founder of ProjectionHub. And over the last decade, we've helped over 50,000 entrepreneurs create financial projections for potential investors and lenders. And today, I'm specifically focused on this marketplace business model template that we've put together. I'm going to put a link to the template in the description of the video below, so you can grab the template and follow along. You'll also, if you stick around to the end of the video, I'm going to give you access to a discount code as a thank you for sticking around and hearing about how the template works. So make sure to do that. And with that, we'll go ahead and dive in. All right, so I'm starting on the at a glance tab. And so this is kind of the end of the process. So once you have entered in all your assumptions and filled out your revenue and expense and asset and liability assumptions, this is what we're going to get to at the end. So there's a number of different charts and high level graphs and key ratios and kind of some key performance indicators for a marketplace type business. You're also going to get a 5-year income statement summary, a 5-year cash flow summary, a 5-year balance sheet. Then you'll get the income statement, cash flow statement, and balance sheet statement all broken down by month for each of the 5 years. So you get that monthly level detail if you need that, as well as the higher level annual summary. But in order to produce all these reports, we have a little bit of work to do. So I'm going to jump back to our first input tab here, our input assumptions tab, and walk you through how to fill this out. So the first thing you need to know is that any cell that's highlighted in light blue is an assumption that you can change without breaking something in the model. So you'll be able to put in your company name, a projection start month. You can put in your investment round that you're trying to raise, perhaps, or investment that you've raised in the past. So here, as an example, we have a $2.5 million seed round, and we have month of operation invested at 0. So this would be basically, we are assuming that these projections are starting once we raise this round of funding. You can add fixed assets here. So in a marketplace business, you're probably not going to have a whole bunch of equipment and that sort of thing, but you may have maybe a trademark, some intangible assets, maybe some employee equipment. So you can see how you can enter that in here. And then again, you probably won't have a loan either. Typically, you're probably looking for investment, but if you do have a loan, you have the ability to enter in a business loan here, an amount, what month you'll start making payments, interest rate, and a term in months. So 120 months is a 10-year term. Okay, so the input revenue tab here is where a lot of the customization for this marketplace template is built in. So you have the ability to say, what month do I expect revenue to start? So for example, if you raise 2.5 million in month 0 of the model, then you are gonna use that money to build out the MVP over the first several months and then turn on revenue potential in month 4 as an example here. So we have the ability to kind of look at customer acquisition from both the seller side and the buyer side. So again, this is looking at a two-sided marketplace. And so if we treat this example, we can think about this as, maybe like an Etsy platform where you have sellers and buyers, right? And so we're going to do some seller-directed ad spend here. We're advertising to try to drive sellers to the platform. We have a cost per click estimate here. And you'd be able to use tools like Google Keywords Planner tool to figure out what a estimated cost per click for your particular type of keyword might be for sellers. And then you can add in assumptions for organic visitors. So these would be whether it's through organic search engine optimization or just word of mouth. These are visitors, potential sellers specifically, that are coming to the site. And that gives you your total number of leads, sellers here per month. Then from there, we can say what % conversion rate do we expect to get from those leads that end up becoming new sellers who register as a seller on the site. Then we also have the ability to say what percentage of sellers leave each month here. And so we kind of expect, that there'll be, maybe a number of sellers might sign up and maybe never even post their first product for sale. They're just registering So maybe there's a high churn rate here of sellers. So that will then give you your total number of active sellers on the platform. And then we go through the same exercise on the buyer side. So advertising for buyers, we have a cost per click, we have organic website visitors here, and then some conversion rate of those leads that turn into registered users on the platform as buyers. Okay, so then what we need to do is say, okay, what number of units are made available by each seller per month? So again, we can think about this. There's some examples here, but if we're thinking about the Etsy example, we can say, okay, each seller is going to make 40 units of whatever they're making. So maybe they're selling tables, or they're selling artwork. So they're going to make 40 units of their artwork available per month on average for the sellers. And then you can apply a growth rate to that average number here. And you can select whether what the platform is selling is goods or services. There's marketplaces that sell services, and so that would be like maybe like an Upwork, where you're selling contracted, matching contractors with companies that need to hire contractors, right? So in this example, we're going to say they're selling goods. We can see what are the maximum number of units available for sale during the month based on those assumptions. Now we need to kind of make sure that the buyer demand and the seller supply are in equilibrium here, right? And so we're going to say average units purchased per buyer is 1.5. So we've got all these buyers on the platform, and we're saying per month, a user would like to buy 1.5 units of product on our Etsy-like platform here. And so what that is going to do down here is it's going to check that supply and demand. So what we're saying here is we've got units of buyer demand. So how much buyer demand do we have? Well, we have the 1.5 units. So if we look at this, it's 1.5 units times the number of buyers here, okay? So that's how much potential demand we have. Now, how much supply do we have? We've got the number of units here available for sale by the sellers times the number of sellers on the platform to give us our total number of unit seller supply, right? And so what we're going to do here is just make sure that the model is going to automatically make sure that you don't sell more than you have seller supply to be able to sell, and you don't sell more than you have buyer demand. So it's always going to be the lesser of these two numbers, right? So yeah, we have 2,200 units of seller supply, but we only have demand of 942. And so we're only going to sell 942. So then now we know, okay, we're selling 942 units on the platform in that month. Now we need to figure out, okay, what types of units are we selling, right? And so we can have different levels or types of product that we're selling, or types of services if we're doing services, with average price points. And then this gives us a way to break down how those units are being distributed. And so you're saying, okay, 40% of these 942 purchases are for this level 3 product, 5% for level 1, and so on, right? So you want to make sure that these percent of purchases here adds up to this 100%. Okay, so this is going to allow us to kind of calculate that total transaction volume on the platform, right? What is total the total value being sold on the platform? But then you, as the marketplace owner, you are going to you don't get all the revenue, right? You only get a portion of the revenue, whether that's from a transaction fee, a per unit fee, or a percentage of revenue. And so you have the ability here to kind of do 3 different options. You can charge a per transaction fee, a per unit fee. So, one transaction, you might buy 10 units of something. So if you want to charge by the transaction, or you can charge by the unit, or both. And you can also charge a percentage of revenue as well. And so this now is your marketplace revenue calculation down here. Now, we also have been asked by our users to add in the ability for there to be subscription revenue as well. And so sometimes marketplaces will have kind of premium levels where either the buyer or the seller can subscribe to the platform and gain additional features or benefits in that way. So we have the ability now to do both seller-side subscriptions and buyer-side subscriptions. You have the ability to add in different tiers here. We're looking at the seller side first. So you have different tiers of subscription, what month you are launching that subscription, what month that's being made available, then what percentage of sellers are subscribing. So we'd say percent of sellers subscribing at this level. And so we were saying, okay, 50% of our sellers are going to subscribe at this basic level, which is $8 per month, 10% at the premium level, and 5% at the pro level. Now you have the ability to also determine whether you're going to do monthly or annual payments. And so, for example, it's $8 a month or $80 a year. So you're getting basically 2 months free. You're getting a discount if you pay annually. So some percentage of customers are going to pay annually. So we're saying 80% pay monthly, 20% pay annually. You can adjust those assumptions as you go. So that will calculate your seller side subscription revenue. And then we have the ability to do the same basic process here on the buyer side. Let's say you also have a buyer side subscription offering, and you can decide what percentage of buyers are subscribing and whether they're paying monthly or annually. And so all of this kind of culminates down here in our 3 different levels of revenue. So we've got marketplace revenue, seller side subscription, and buyer side subscription revenue. One thing I kind of glossed over here is we have the ability to put in basically your cost of goods sold for the platform. So this is direct expenses, so things like hosting, your cloud infrastructure, and you can enter in these things as a percentage of revenue. So this could also be third-party software tools that you utilize, services that you utilize within your platform as well. Okay, so now we're going to move on to our input other expense tab here. You have the ability to add in different expenses here. You can add in your own expenses. You can categorize them. So we've got a few pre-populated categories here: marketing, general and admin, development and maintenance. And you can select whether you want the expense to be a fixed dollar amount, meaning it's the same dollar amount each month, or a percentage of revenue. So it could be a percentage of marketplace revenue, seller side subscription revenue, buyer side subscription revenue, or total revenue. So in this case, I'm going to say that credit card processing fees are going to be a percentage of total revenue. So if you're using Stripe, for example, to process your payments, roughly 3%. And so you can automatically add that in here, and it will scale with your revenue. Now you can also add in, various fixed expenses. So let's say during the first few months, we're spending more on some platform development, and then that levels out. You'll notice what I did here is that I have specific dollar amount expenses here for the first 2 years. A lot of times what our users like to do is, they're looking to raise a round of funding, and they say, okay, well, we're going to try to be specific with our projections and how we're going to use the money for the first, 18 months, 2 years. But then, year 3, 4, and 5, it's really hard to know, how much I'm going to spend on SEO services, right? Well, it really kind of depends on how well the platform is performing. How well are we performing? And really, it's probably going to be more of a function of some percentage of revenue. That's what I'm going to spend on these different expenses. And so a lot of times what we do is we'll put in these specific numbers here for the first 2 years. And then for here, they'll zero these out. And instead, what you can see what I did here is I just took 3 broad categories: sales and marketing, general and admin, and software development. And I kind of said, okay, we're going to just lump all of our operating expenses into these 3 buckets. And I'm going to set these up as a percentage of total revenue. And so we're going to spend 18% of total revenue on sales and marketing, 15% on general and admin, and 20% on software development. So this allows you to kind of scale those expenses with revenue instead of having to pick specific dollar amounts out in year 5 when you really have no idea how much you're going to spend specific dollar amount wise. So I think that ends up being a pretty good approach. So we've set it up that way as a default. You don't have to do it that way. You can put specific dollar amounts here in year 3, 4, and 5 if you prefer. So we took a similar approach on the salaries and dividend side. So what you'll notice is we said, okay, here's the 5 positions we're going to have to start with, let's say, and here's their annual salaries. Just to be clear, we'll say annual salary, and we've got benefits and the month that they're starting. So we've got these 3 positions starting in month 1, a marketing lead in month 13, and an assistant in month 15. And then you'll see that I have them ending in month 24. So the idea here, again, is that here's how we're specifically spending our money for the first 24 months, first 2 years. But then after that, those salary positions are all going to kind of sit in this in this field, in these fields here. They're going to be part of sales and marketing department and general admin or software development. And so that's why I have this ending in month 24. Okay, so that brings us back to the at a glance tab here, where you'll be able to see these different key performance indicators. You can see things like average revenue per unit, total units sold, buyers and sellers on the platform, various key ratios here. So if you have any questions about how to fill this out or customize it for your specific scenario, please reach out to us at support@ProjectionHub.com. And as I had mentioned and promised, as a thank you for sticking around to the end of the video, we have put a form in the description of the video below. You can fill out that form and get a coupon code. It'll be our latest coupon code that you can use during checkout to get a discount on this particular template as our thank you to you. So if you have, again, any questions, reach out to us, support@ProjectionHub.com, or leave us a comment in the comment section of the video below. We'd be happy to help. Thanks.